Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with Sahill, co-founder and CEO of Parafin, a financial infrastructure company that enables platforms to provide embedded financial products to their small business sellers. Through a single integration, Parafin handles underwriting, capital markets servicing, compliance, and customer support, allowing marketplaces, vertical SaaS providers, and payment platforms to offer capital, spend management, and savings tools. The company has partnered with organizations such as DoorDash, Amazon, and WorldPay, serving hundreds of thousands of businesses and extending more than $16 billion in financing offers. Poddar founded Parafin in 2020 alongside Vineet, Goel, and Furman, building on a background in data-driven financial systems and applied machine learning. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Sahill, thank you so much for taking the time. Great to be with you.
It's great to be here, RJ. Thanks for having me.
To set the stage and to provide a little context to our audience, let's talk about the end market that you address, which is small businesses, and maybe the problem that you saw early on, given the size of this market and the unaddressed need. So let's start there.
Yeah, Parafin's mission is to grow small businesses. As you can see, small businesses have effectively two ways of funding themselves. One is by generating revenue, making sales. And that's a problem that payment processors solve by digitizing payments and making it easier for small businesses to get money in their bank account vis-a-vis generating revenue. The second way a small business can get money in their bank account is through debt and accessing the debt markets. And historically, these markets have been relatively closed for small businesses. So Parafin's overarching goal is to make debt lending, debt-like products accessible to small businesses and do so in a way that it's seamless for them to access, very transparent pricing, no hidden fees, no late fees, and make the entire experience absurdly fast. We also use business performance only for underwriting. Historically, one of the challenges in the US especially has been that small business loans have been consumer loans masquerading as small business loans. What do I mean by that? Incumbent methods require personal credit scores, personal credit checks, often personal collateral to underwrite a small business loan, which is not something that small businesses prefer. Nobody wants to commingle business liability with personal liability. And they don't have to in a world where payments are digitized, their sort of economic activity is easily visible through digitized data. And all of that data can be analyzed and modeled. And on the back of that, we can create user experiences that enable them to get access to lending and debt-like products. So today, Parafin offers a working capital for small businesses, a buy now, pay later solution for small businesses, and an embedded credit cards. Our overarching strategy is never to go to the small business directly, but embed our products in software platforms that they use every single day. These can be vertical SaaS, on-demand marketplaces, payment solutions, B2B retail, anywhere where they're doing economic activity. We can embed Parafin's products, and that can allow the small business access to lending or debt-like products. There's a lot of advantages in doing so. First and foremost, you have a very high binding energy between the software platform and the small business. The small business often relies on the software platform to start, run, and grow their business. In many cases, these platforms are processing payments, generating demand, solving important workflows for small businesses. So they have not only the trust of the small business, but high engagement of the small business. And, trust is the bedrock of any financial transaction. So it's important to lead with that trust in order to, maximize sort of the adoption of the product, but also lead with something where the small business knows that the platform has its best interests. The second reason our strategy of going and partnering with the largest platforms where small businesses are transacting makes sense is because these platforms have a plethora of data on the small business. They know exactly how much revenue they're making, what the composition of their revenue is, how many customers have bought the products, how long they've been in business for, the identity of the people who run the business, and so on and so forth. And all of that data, Parafin today ingests that, and we underwrite a small business based on that on the back of are machine learning and AI models, which I'll speak about in a minute. And that allows us to create extremely seamless and absurdly fast experiences for the end SMB. So yes, our end sort of customer base is small business who we are trying to grow by getting them funded through debt products and lending products. However, our approach is to partner with the largest platforms. And so in some ways, we have really two sets of customers. The large platform, in this case, real examples are DoorDash, Amazon, Walmart, TikTok, MindBody, Jobber, Gusto. These are all Parafin partners. Their incentives are aligned with the small business because in aggregate, the small business will use capital to grow their business, which in turn grows the platform itself.
Was it obvious from the beginning that you should be partnering with these platforms?
Yes. So we took the very intentional strategic approach of partnering with the platforms. And there's a variety of different reasons that's the case. I mean, we already discussed sort of the advantages in doing so. If we kind of now look at the disadvantage in not doing so, the Silicon Valley is a graveyard of small business lenders. We have tried, almost all have failed. There's a few exceptions. When you look at the exceptions, the most notable ones are Square Capital, Shopify Capital. Lending is a product that they've embedded in their platforms. And so Parafin's sort of strategy is to make that available for any platform and do it in a way that the platform can maximize the economic opportunity while minimizing the amount of effort to offer such a product to a small business. And the reason Silicon Valley is a graveyard of small business lenders is because, most of them that have failed, in fact, all of them that have failed have gone direct to the small business. When you do that, you're not a product-led company, you're inherently a marketing-led company. You can imagine the two examples. Let's assume we have RJ Capital and Sahill Capital, both trying to get 100,000 restaurants to take loans. The only scalable way to do so is to run some sort of marketing campaigns, ads. And when we do that, our natural posture to win that market would be to invest more and more into our marketing teams. Because if you have the better ad or the better creative or the better message, you get all the customers and I don't. And in that case, my only sort of action that I can take is either to go and address a segment of the market that is more risky than the one they're capturing or the one you're not interested in, or to reinvest in marketing to try and, beat you at your own game. So if RJ and Sal Capital will sort of spiral down, because if I were to go and offer a product to a more risky category of merchants, I'd have to have higher fees because I have higher loss rates. And so lending inherently is an adversarial sort of transaction in many different ways, and you want to reduce that as much as possible. And leading with a marketing angle only amplifies that. And then secondly, the small business is going to get attracted to the ad first versus what the actual product is and what the experience there is. So we can't even showcase our capabilities there until, we want the customer through some sort of marketing campaign. And so therefore, if one wants to avoid this pitfall and the fate of many other small business lenders, you have to have a differentiated strategy, differentiated access to the market, and do so in a scalable way. So in Parafin's case, we have zero CAC. We never pay any customer acquisition cost. Once we have integrated into a platform, we can pick and choose who we want to give loans to, which is backed by our underwriting models. And the merchant sees the offer. It's a pre-approved offer on their merchant dashboards. It's coming from a place of trust, and that allows for a higher adoption of the product, but also allows, more importantly, for us to sustainably offer what we do for decades to come.
There's obviously small businesses that are outside of these platforms, but when you think of the end market that you're getting and the total size of that, obviously it's big enough. You don't need the small businesses outside of those platforms. Was that kind of your calculus?
Yeah, I mean, look, I think there's a very important final moment to answer, which is sort of implicit in your question. If we were to start Parafin 10 years ago, it would be more true that there'd be small businesses outside of these platforms than it is today. For example, 10 years ago, DoorDash was barely founded, really small. Today, it has 500,000 restaurants, roughly speaking. And so over time, there is a very obvious tailwind where more and more small businesses are flocking to these software platforms to start, run, and grow their business. Software platforms are becoming very quickly the operating system on which a small business runs. And eventually, everyone will be on it. Today, the market is big enough that the vast majority of small businesses are already on one or more software platforms. And so however, 10 years ago, that would have not been the case. And by the way, small and medium businesses generate, close to half of the economic activity in the US. And when you kind of look at the amount of access they have to debt-like products, it's much, much smaller in comparison to what's happening sort of on the consumer side. And so there is a real argument to be made that due to a lack of access, due to a lack of sustainable access, this market has not evolved, and we're here to change that.
Can you give us a sense for the scale of the business currently? And you can use whatever metrics you're comfortable sharing.
Yeah, so we recently announced that we crossed 100 million in annual revenue run rate. And so, that's the public number we've shared. That is about almost 3 months old now, the news. So, you can kind of project from there, but that's the public number we've shared. Yeah.
The team. Now, you've scaled rapidly. You brought over, I think you had a certain set of folks that you had worked with previously that you brought to founding the company. Can you tell us a little bit about that team composition?
Yeah, so my co-founders and I met at Robinhood. We were early members of the data science and data engineering teams there. I think when we started at that firm, it was roughly a few tens of thousands of users, no revenue. The Robinhood app had been on the App Store for less than a year. And by the time we left Robinhood, it had $1 billion in revenue and 10 million users. So we got to see firsthand and be part of building a generational consumer fintech business. And around us, we clearly saw a renaissance in consumer fintech. It wasn't just Robinhood, it was Coinbase, Cash App, Chime, a bunch of other platforms that emerged during that period in the mobile revolution. And meanwhile, we also very clearly observed that there was a dearth of the number of products that were being built for the small business category. Yes, there was payment processing, vis-a-vis Stripe and Square, but largely the market remained untapped, especially when it comes to getting access to lending products to small businesses. So we wanted to change that. My co-founders and I had a background in small businesses in the sense that I grew up in a small business family in India, and so did my co-founder Vineet. And we've really seen firsthand what the access to and the lack of access to capital can do for a small business. So it's a problem, and it was a market segment very close to us, having seen our parents kind of build in that category. And we felt like we had all the learnings from, being part of building Robinhood in the early days to build products in this category.
Mm-hmm. You have a deep background in physics. At that point in time, when you were deep in your studies, did you think you would head into a different profession?
No, is the honest answer. So you're right. I did a bachelor's, a master's, and a PhD in physics. My PhD was in particle physics. I worked at the Large Hadron Collider at CERN. I was part of the team that discovered the Higgs boson at CERN in 2012. Peter Higgs won the Nobel Prize for that. And that was a very seminal moment in particle physics. And at that point, I'd spent almost a decade out of high school just doing particle physics and physics in general. It felt like it was everything in the moment, and it felt like this is the infinite game that I want to play. But I think there were some important moments during my PhD that kind of opened the door to doing something else apart from physics. And what the first thing there is that just where the Higgs was discovered. CERN, the Large Hadron Collider, was built primarily for the Higgs, but there was a promise that there's going to be a lot of new physics and unseen physics, like things like that you hear in sci-fi, like extra dimensions, dark matter, microscopic black holes. And so there was a lot of excitement around that type of new physics discovery beyond just discovering Higgs. However, most of it depends on a much, much heavier Higgs than what was found. So the Higgs was found at a certain mass, and had it been heavier, it would have been more interesting to continue to do particle physics experiments at CERN. But because it was much lighter, it basically excludes all of this new physics at the CERN scale. And what this means is that now we need to spend maybe a couple of more decades to build a larger collider in order to test the scale at which these things can really appear. And so that felt like, hey, nature was almost like trying to hide secrets from us at CERN, and therefore, venturing and using the skills I'd learned and doing something different made sense. Interestingly enough, particle physics, like the kind of skills you learn there, the hard skills, are very similar to what you do in a data science role at a tech company. You do a lot of statistics, a lot of machine learning, sifting through lots and lots of data. It's collider data versus like user data, which you sift through in tech companies. And so my skills were very easily transferable. So I moved on to data science, had a stint at Meta before I met the team at Robinhood.
Mm-hmm. I'd like to touch on your investors. You've raised hundreds of millions of dollars in capital, both debt and equity. Early investor was Ribbit. You have Thrive, GIC, and Notable led your last round. Tell us a little bit about the value that the investors have brought to you aside from financial capital.
Yeah, so we've raised almost close to 200 million in equity and multiples of that in debt capital. And the debt is used to fund our products. And we've raised from a different investor every single round, even though the previous investors have always participated in pro rata or super pro ratas. Ribbit was a team that we knew very well, having worked at Robinhood, and they were early backers of Robinhood. So we, had been with them in data rooms and had pitched the company Robinhood back in the day to them and gone through multiple fundraising process. Thrive was in a sort of similar bucket. And GIC and Notable are teams that we've met sort of along the way. For each of those, I would say, Ribbit is a very special fund. It's obviously, historically been very fintech focused and fintech experts. They took a massive bet in fintech being a really big category in the internet age, in the mobile age, and they were right in a very big way. As a result, they have the deepest connections in the fintech world. They can get us a meeting with anyone working, whether it's in the old world of finance or the new world of financial technology. And I think having that sort of breadth and depth, which is very concentrated in fintech, is very, very helpful. They've seen pretty much every good and bad situation in fintech companies. And that's very helpful because they've kind of navigated through that and seen how generational companies like Robinhood and Coinbase have been built. So they're exceptional. And in fact, when we first pitched to them, we weren't even sure what we were working on. We did not even have work visas to start our own companies in the US. We had work visas to work at Robinhood, but not to start our own companies. And they took a big bet on us very early on. They rarely do that, but I think our Robinhood relationship sort of helped them to take the bet as well. Thrive is obviously a very special team. The best way I like to think about it is they are very well connected to the old world in the US. And they can get us in front of, anyone there. So incredible network in the East Coast in the old world in the US, and increasingly so in the West Coast. I mean, they're big backers of OpenAI. They have an excellent portfolio team, that is able to help us both at an operational level, but also from a go-to-market level. GIC, obviously a very massive fund. I would say probably the most long-term capital that is out there in Silicon Valley. And they were the largest shareholders of a firm when it went public outside of the founders there. And so they've seen embedded finance and its power across many different markets, many different periods. They have a huge debt side of the book as well. And so, they often fund with debt companies that they backed with equity. And so having that sort of long-term capital, which has a lot of expertise, and particularly in embedded finances, is very helpful. Notable, Hans is just phenomenal. He's like, I don't know what, like 6-time Midas, top 10 Midas list in the recent years. He actually said no 3 times before he said yes. So we pitched to him in the previous rounds, but it is only in the CVC that he got enough conviction and came and backed us. And we're very grateful for him to have changed his mind and made the jump and taken the leap of faith. He is special in the sense that he's probably the most international of all those investors. He's seen how businesses have been built in China and in the US, in Latin America. He has a very, very good sort of overview of how different founders are building companies in different parts of the globe. And I would say extremely hardworking investor, which is always great to have on a cap table.
Mm-hmm. We're coming up on time. I have 2 final questions. One is, can you tell us about a person who has had a profound influence on you?
There's too many to name. There's obviously personal life, professional life. So there's many people to name. I can tell you like sort of examples of the type of people that are profound impact and then give you some examples. And so people who have extremely good mental frameworks and are able to distill that very, very clearly. One of my mentors is pretty famous Silicon Valley angel, Goel Rajaram. I often text with him and I'm able to get to a very simple answer to a complex question very, very quickly. He's seen all these scenarios across his career. He built the early team at Google, Facebook, Square, DoorDash, etc. I think grit and persistence is something I've learned from Vlad at Robinhood. He's been through a lot of volatile times and, now the business is doing extremely well, but I've seen him kind of go through that and some very difficult situations and always come out as a winner on the other side. So yeah, those are the types of people. And I would say lastly, and most importantly, is my co-founder, Vineet. I get a lot of different things from him, mental models, ideas, pushing back on my bad ideas, just riffing and coming up to like good ideas by just having a casual conversation with him, his grit, his persistence, the way he manages his teams. So I learn the most from him and I do that every day. And that's the biggest gift I have.
Last question. To the extent you do have time outside of work, how do you like to spend that time?
So I have a 9-month-old at home. So I recently became father. So my wife and I are very, very busy just immersing ourselves in parenthood currently. I love to, hang out with my friends, go outdoors, eat good food. Yeah, so it's mostly like family and friends and exploring the Bay Area with them.
Sahill, want to thank you again for taking the time. It's been a great conversation.
Thanks, RJ. It's been good here too. Thanks for having me.